Good afternoon, everyone. You're all very welcome to Friday's US market open at 2:20 p.m. for the 12th of September. So last few days we've had a lot of volatility. It's important to kind of see the lay of the land into the weekend close, following, of course, Wednesday's PPI, Thursday's ECB meeting, and of course the subsequent CPI data at 1:30, and of course some of those European data prints this morning. As we move into the Michigan Consumer Sentiment Index at 3 o'clock today. So when we look at the broader market conditions, despite all the volatility, despite all the narratives posed, markets has done incredibly well as we move into Friday market close. Now, we know traditionally, if you were to look at the last 3 or 4 September market closes over the last 4 or 5 years, 2021 into 2024, the average decline is somewhere between kind of 2 and 3%, with extreme cases of being kind of 6-7% declines. But that is not the case for September. As we look at September, all of these risk-orientated assets are counter-cyclical this year, which means that for the first at least 12 days or so, markets is proving to be very resilient off of those correctional moves at the end of August. So we're seeing that cyclical rotation into the end of August. Buying has definitely been noted after the last few weeks. And of course, we've gathered and meandered around the volatility this week incredibly well. And that was, of course, noted on Wednesday. Strong movements in risk-denominated assets off of that PPI print, which, of course, as we knew at the time, came in much weaker than expected. And, of course, when those data prints comes in weaker than expected, it allows those, I suppose, risk fragmentations to actually be visible. And that was, of course, off the backdrop of the data prints on Monday. On Tuesday, but of course overall markets have done resiliently this week. And of course on Thursday, yesterday, for the CPI data prints, market conditions has still remained in line with the data perspective, but actually when we look at it, a little bit of downside volatility on the algos at the newsprint initially, but market conditions fed up, and of course by about 3 o'clock we got that break, we got that expulsion, and markets continued moving higher into the yesterday's close. Now, as we look at it on the weekly perspective, again, another strong weekly performance. The first couple of weeks, obviously last week and weekend of August, last week of August, obviously incredibly volatile. This week it's showing its stead. Now, of course, that's going to be interesting because, as I said, we're only the 12th of September. We still have another 2 full trading weeks before we actually see whether this September is going to veto a systematic change, whereby we obviously see a positive outlook for September into October, November, and December, particularly as the Fed meets next week. Or are we going to actually see correctional pullbacks with potential risk-denominated segmentations, as I said, with the FOMC next Wednesday? I think that is really all eyes set. We are looking for 25 basis point next week when the ECB meets on the 16th and the 17th of sorry, not the 16th and the 17th, on the let me get my calendar. I think it is actually, sorry, it is, apologies, I am right. 16th and 17th is the 2-day meeting for the Fed. 17th is going to be the interest rate meeting. So, of course, all eyes is going to be on the 17th for the Fed. Now, as I said before, we are expecting that 25 basis point cut by the Fed. That's pretty much been priced in. If you go to Polymarket, the CBOE, or any other kind of websites that offers sentiment indexes on particular events, like, for example, the FOMC cut, of course, that is what we're expecting. So anything above or below that is going to be a little bit of a surprise, whether it's a 50 basis point cut or no cut at all, which I don't think anyone is expecting. Those would be the surprise elements. But so far, we're expecting the Fed to resume cuts in September, and it really leaves these risk-denominated assets into next Wednesday, buying risk as such. And of course, we're seeing the S&Ps and NASDAQ move aggressively higher over the last few days in particular. Okay, so that's kind of where we are from a fundamental perspective into the weekend, and of course into FOMC. Would it really be surprising if we saw markets actually hold up well into the weekend and then see buying into Monday, Tuesday with a potential correction on Wednesday? That could potentially be a narrative, because of course when we know that the markets are expecting a certain thing, like for example with the 25 basis points cut, we tend to see pre-buying. So that's where the narrative of buy the rumor, sell the fact comes in. So they're buying the rumor of the Fed cutting rates next week and then selling the fact when the announcement comes out. I think that is kind of structurally important as we move, as I said, into Wednesday when the FOMC meet. But from there, when we look at the risk denominator, and we'll look at different assets now shortly as we look at today's call, but we're seeing the stock markets hold up very well. We're seeing the VIX volatility curve. We had spikes on Monday. Last Friday off of the NFP, we'd spikes. We'd spikes on Tuesday. We've had spikes on Wednesday. But overall, those spikes have been curtailed because there's nearly been an immediate counteraction move, and of course you can see that for yourself on Wednesday following some of the data prints. There was a little bit of a spike higher, but on Thursday the VIX volatility curve was back down. So these are marginal day-to-day spikes, nothing to get too carried away on. But in terms of short-term trading, day trading action, price action, quite useful, quite important. But when we look at the grander scheme of things, once the volatility curve remains in these lower bounds, sub 15, sub 16, in this 13, 14 handle highlighted here in yellow, it generally means that there's less of a safety play in these risk assets, which means then you'll see the likes of the S&P, you'll see the likes of the NAS, you'll see some of these other risk denominated assets tend to actually flurry. Now, on the inverse of that, we talked about it last week. We got this bottom on the DXY. We really kind of talked about the DXY. How would it react at this 97.50, 97.60 over the course of the week? Now, at the early part of this week, we'd obviously broken down following the alternative moves last week on the DXY. So we had that massive sell-off on Friday. We had that little bit of a bite back on Monday into Tuesday. Market so far has remained pretty much bound at those 97.50 handles again. You can kind of see that as well. Even when we broke back above that yellow area, which we talked about on Monday's call, and we came back down to retest it, it still remained above that 97.50. So we tried to break down through it again and ultimately failed. So that is going to be the key over the next, I think, week or two, really to see what happens here. Because when we look at on the FX side of things as well, the euro dollar, it got the break, it's come back down, and now it's trading back underneath this yellow area that we talked about on Monday. So until there's a clear breakout and segmentation in risk aversion, that really curtails any sort of downside movement. Yes, we got initially on Friday and Monday, but we didn't get the follow through. We didn't get that secondary bite back, despite some of those volatile news events that we had, obviously, on Wednesday and Thursday of this week. So far, your DXY is above 97.5, and for me, until it breaks underneath 97.5, just be mindful of that, because that's really kind of taking those buyers on the likes of euro dollar slightly off the table until that confirmation comes in. So once we break through 97.5, you're really looking for that euro dollar to go into that 118 handle and progressively higher. If that doesn't happen, well, then the likelihood is this becomes a false break, markets remain bound, and then of course we go back into this prior existing range that we've seen in euro dollar over the last 2.5 weeks, 3 weeks, where it's ranged pretty much between 116 and 117.5. So we just have to be careful of that. Same again with cable, GBP USD. It's gotten back above this yellow level, so this was obviously structurally important on Monday. We got above it, and then of course we remained above it. Then on Tuesday got the pullback. So again, we're still stuck in this 135, 136 level. And as I said, if you're going to see that DXY break below 97.5 next week on the potential of Fed cutting rates and seeing that risk aversion continue, whereby obviously we see denominated risk assets continue to move up, and denominated risk assets being the likes of the S&P, the NAS, crypto, anything with a risk assimilation, then you'd obviously be looking for euro dollar to progress higher. You'd be looking for cable to progress higher. But if the DXY gets back into this prior range, as I said, which we've talked about, then just be mindful of the fact that it mightn't necessarily go anywhere, or it could just become very choppy and meander back and forth. Kind of what we've seen kind of Monday, Tuesday, Wednesday and Thursday this week. It's up, it's down, it's up, it's down, but it's not really done a whole lot, particularly when you look at the weekly side of things. So the weekly side of things is narrowly up. The daily side of things, you'll see yourself very kind of mixed as it's coming back down into that 135 handle. So just be mindful of that as we move into the open today, into kind of 4 or 5 o'clock today. As I said, it's between kind of 5 and 6. We do tend to see some movements kind of factor in then, but other than that, it's really all eyes on weekly close, evaluating sentiment, as I said, into the FOMC next week, looking for that all anticipated rate cut, and then seeing does these risk denominated assets continue progressing higher. And at this moment in time, you would be very, very foolish and very naive to look for selling the S&Ps or NAS yet, particularly, as I said, when the VIX remains bound in those lower ranges and the DXY has incrementally marginally gone back higher, but overall still remains on the flatter side of the curve. So just be kind of cautious of that. Now, we've obviously spoke a lot on S&Ps. Markets holding up fairly well. On the session, it'll be quite interesting because, of course, on the day-to-day session, we've had this breakout yesterday. So obviously spike higher, kind of a bit back and forth Wednesday evening into Thursday. Obviously wick down Thursday, aggressive apex, and markets is holding the POC today. So from a short-term day trading perspective, if we see this value area here around that 65.70, 65.80 give way, you could actually look for a short-term movement back to yesterday's value area. But again, if that selling doesn't come through today, your likelihood is you keep your risk, you keep your bit of a bid into the weekend, and then that becomes the situational play potentially off the FOMC. So if there's any sort of negativity or risk off narrative, that would be kind of where you'd look for it to come. Wednesday and Thursday's last CPI value area there, and PPI value area, which is around about that 65.30 to 65.40. So that's kind of where there's a lot of volume traded at this week. So just be mindful of that. We're holding above the POC yet. The levels haven't broken, so therefore trend is still remaining and keeping to the upside. So just be mindful of that. But if we were to slip and slide, that would be kind of where I would look to come. But at this moment, it hasn't happened as of yet. Now, on the NASDAQ, we've talked about this curve. Got back into the to 28.9, so this was the kind of the inflection point. This black line that we kind of talked about over the last week or so, that was the inflection point that we needed to break through. So of course, last Thursday we got the ascension, Friday we got the pullback. We then had this kind of staggered recovery counteracting last Friday's NFP move. By Tuesday, end of Tuesday, we'd pretty much undone this NFP sell-off. Then of course Wednesday we got a little bit of a grind higher, followed by a correctional move, and then of course Thursday again wick holding up, and then goes to new highs again. And as we see it today, the NASDAQ is trading at new all-time highs again, and is broken up into that 24,000 level, which was a structural level of interest. Now it'll be interesting to see what happens today into the close, given of course yesterday strong daily close. Could we get a little bit of a pullback into that 23.850 handle? Well, let's wait and see. Okay, and again, that kind of symbolizes the narrative that a break here and the NASDAQ was to break the POC. You'd actually expect, like with the S&P, to flow back to the kind of 60, 65, 25, 65, 30s, 35s. You'd actually expect that NASDAQ probably to move back down and test that 23.9, 23.8 level from a short-term intraday position. But as we look at it on the week, you can even see it yourself. Consolidation Tuesday, Wednesday, consolidation Monday and Tuesday, breaks up Wednesday, apex back to value area, and you can see exactly where the bid and the buying came through on Wednesday. No surprise, V-shaped bottom into Tuesday's value area, into Monday's value area, V-shaped bottom, markets go back up. And then of course Thursday we have that wick down again, horrible little wick again from the algos on the CPI data on Thursday. But by 2 o'clock, 1:45, the sentiment was moving progressively higher into the open, a little bit of a counteraction movement, and then of course by 3 o'clock it was just continually grinding higher. So we've gone from that 23.950 up into those low 24,000s, and then from there, as I said, kind of a similar structure, holding above the value area again, similar to the S&Ps. You'd really have to see that level give way for that counteraction movement again, that like replication of this, where we break up, we grind, and then we move back down. But at this moment in time, markets is fairly confident and happy above the value area, this POC, and above this yellow highlighted zone that we've kind of looked at. So that's really the only reason that you'd want to be short, is if there was a slight influx in VIX and there was a little bit of risk aversion here where price action was taken out the value area, then you'd kind of look for a segmented move back down. But if that doesn't happen, well then you've got markets holding up into the weekend. So there's a lot to kind of play for this week. Markets have done incredibly well holding up with the PPIs, the CPI prints. The data has been helpful as well, no surprise there. And as I said, we've seen these markets go to all-time highs. Similar with the Dow, we had that counteraction on this week, obviously the Monday, the Tuesday print, we got back down to the value area. When we did our market zoom on Tuesday, we actually highlighted this yellow level, and watch out for that 450 handle. It caused as a bottom on Tuesday, it caused as a bottom on Wednesday, and then of course we got that rapid breakout on Thursday off the back of the CPI event. And of course what we've seen from there is the Dow also getting to new highs on the week, and new all-time highs as well. And this was the one that lagged for so long, but you can kind of see yourself, we've got the breakout, we got the retest, we got the structural short-term plays on Tuesday, on Wednesday, 45, 400, 450 bottom overall. We've got the new high again, and it certainly looks like price action's pulling back. So let's see if that creates a little bit of a stir, if there's a little bit of a pullback today. But markets, would we see a retest that 45.7, 45.8, that breakout on the likes of the Dow, similar to the Nas, could potentially be a play. But let's wait and see what happens today. And you'll actually notice that the Dow is sitting pretty much at the value area, the NASDAQ is sitting just above it, and the S&Ps is sitting just above it. So if those three were to all fail, all to break down in the session, then you'd immediately look for those short-term correctional plays back down, which basically mitigates and retests the CPI aggressive breakout that we had yesterday, which for me wouldn't be surprising if there was a little bit of an undoing. But again, keep an eye on the VIX, keep an eye on the volatility side of things, and just be visual of the price action. As I said, into that open first 30 minutes, we have the Michigan consumer sentiment data at 3 o'clock. If that was to, let's say, come in weaker than expected at 54, 55, that might be a narrative, a short-term news event to create a little bit of a 0.3 or a 0.4 or 0.5% pullback in the likes of the NASDAQ, in the likes of Dow Jones. Now, again, a 0.5% pullback in the Dow Jones is roughly 230 points. So a 230 point pullback factors back into that narrative of a potential retest of the breakout of the highs that had occurred from yesterday. So just be kind of careful of that, just be mindful of that, and let's see what happens as we move, as I said, into that 3 p.m. data print. But other than that, markets on the course of the week have done incredibly well. Interesting to see what narratives comes out over the weekend. There's a lot of hostility and political divide in the US after the Charlie Kirk assassination on Wednesday. A lot of anger and tension in the political sphere in the US. So that is obviously something that we're going to have to watch out at. As I said, Trump, we know he's been very vocal on a lot of matters in the economy, particularly when it comes to the Fed central bank as well. You'd wonder if there was any sort of division would start to occur again, particularly if the movements on Wednesday by Fed Chair Powell and his committee was less than desirable by the Trump administration. So keep an eye on that one as well. But as I said, let's look at the data at 3 o'clock. Let's evaluate price action into the close. And then, of course, we move into Fed week next week. Blackout, obviously, Monday and Tuesday. Meeting Wednesday. Announcement Wednesday evening. And then, of course, we get the next course of action by the Federal Reserve in the US. All right. So that's pretty much it, folks. In that regard, obviously, we've seen gold do incredibly well over the last week or so. Our last few weeks. Oh, let me just unwind this. Sorry guys, XAU USD. Okay, let me just go to the higher time frames for a moment. So again, obviously very aggressive break last week. A little bit of a period of consolidation maybe, but overall markets, you'd have to say, in the gold sphere, still remaining bid to the upside. Even when you look at that aggressive move from Friday, aggressive continuation on Monday, Tuesday and Wednesday, a bit back and forth, but overall probably in a little bit of a period of consolidation in this massive bullish breakout. But that's where gold is trading at the minute. Euro, dollar and cable we've obviously discussed. S&Ps, NAS and Dow we've also discussed. We've talked about the German DAX. It has remained pretty consolidationary from Tuesday. It's been very back and forth, very up and down. It's still holding above that 23.4, 23.5 platform low, following those breaks last Friday, and volatility Monday, Tuesday, Wednesday, Thursday this week, with of course the ECB on yesterday, and they too of course have kept the rates stable with no change. That's kind of kicked the can down the road in terms of Europe at 2.15% interest rates. And then of course in the FTSE, we got that break above the 92.50s. We talked about this on Tuesday. That was the key level, broke up, came back down, retested, and since then, Thursday into Friday, the FTSE play, the UK 100, has continued to grind higher. And we talked about this idea, this narrative of the FTSE going to 9,500, and I would say that's probably the likely outcome now, given that this market is continuing to trend on the upside. So for those of you who trade FTSE, very, very interesting play there, because it's finally broken out. For those of you who are long-term FTSE traders, it refused to make all-time highs for years. And then, of course, with the volatility in the commodities markets, with oil and gold, etc., we're starting to see that volatility flow back into the FTSE relative to its European counterparts. And then, of course, really to end out the week, we talked about this Bitcoin price at 113. We got above it on Wednesday. We continued aggressively moving higher yesterday off the back of the CPI data print. We obviously commented in our discussion group as well. in the crypto sphere about the movements off of recent CPI events, and that was again illustrated yesterday, where the low on the day was 113.6. The high of the day was at 116.3. So there's about a $3,500 low to high scenario yesterday, again showing the volatility in the CPI event. And of course, we are seeing a little bit of a drip off back down. So interesting to see if there's any sort of negativity in the crypto sphere and any sort of pullback to that 113 and a half handle, given the aggressive moves that we've seen Wednesday and Thursday. But BTC is holding up again relatively well into the weekend. As I said, it's just interesting to see if there's any sort of dips. And of course, with that one as well, Ethereum, we talked about this range between 42 and kind of 4,500. We finally poked above 4,500s. We're at 45.11 today. It'll be interesting to see if there's any sort of pullback. We've seen a lot of volume to the downside. We've obviously seen successive lower lows at Wix, lower low at Wick, lower low at Wick, lower low at Wick on NFP, but then failed to actually close out that Wick. Markets went lateral. We got a little bit of a grind higher on Wednesday. We got that reinforced move yesterday. Like with all of those risk denominated assets, we're seeing a little bit of a correction today. So let's see what happens there. 44, 45s will be an interesting narrative if there was a correctional pullback. But as I said, all these risk denominated assets so far are actually holding up despite maybe a slightly softer open today. So let's see what happens there in that one. And then of course, as we move, as I said, into Wednesday, Fed Reserve, Wednesday evening, 7 o'clock. That is going to be all action. But of course, we'll talk about that more next week in our preparation. All right. Have a great weekend, everyone. Trade safe, and we'll see you all next week. Have a good one.